So Michael Burry released a tweet. I haven't got it exactly, but he believes now that the market crash is only halfway over. For a lot of people out there who are in more speculative and maybe growth companies, the hope was that this market crash was over. And I must admit, looking at this week, it does kind of feel like there's a little bit of a bottom going on. We've kind of evened out a little bit. Obviously, that can lead to a false sense of security, so we don't want to take that for granted at all. But do you think the market is going to go lower at all?
I just think it's impossible to tell, which is why I always really dislike it when people talk from a position of confidence on macro. I think it's, even for Burry, I think there's far too many moving parts. I think you could miss something that could, you could change your thesis on something, or, something could happen which blows up your thesis. So with macro, and I said it on the Discord the other day, that I tend to find that it's best to treat it as almost like it doesn't exist, and just to continuously focus on the bits that you can control, because I think in the end the macro stuff's gonna even itself out in the end. So I've read Burry's tweets. He's very convincing. I don't know if he's right or wrong. He's definitely not going to tell me whether he really believes these things or whether he's just trying to with a big short position on something. Yeah. But whether it's the bottom or not, I don't know. I mean, it could be a suckers rally. It feels it feels like any of the other rallies that we've been in. Everything seems to be shooting up just a little bit too fast, and there doesn't seem to be enough positive news. But I mean, who knows if the inflation numbers come in and they look really good, and the interest rates don't need to be hiked anymore, then why isn't it the bottom, I guess?
Yeah, the reason why I brought this up and why I wanted to talk about it so much was because I've been putting stuff out on Instagram recently, and I've been getting lots of messages with the same old thing. Everyone was messaging me with, "Oh, you wait till earnings compression. You wait, it's all coming. The earnings are going to get done. The forecast isn't there. The earnings all need to be revised." And I was looking, going, why are all these people saying the same thing? And I just didn't get it. And then I saw this tweet and I went, oh, here we go. Right, so there's a bit of news out there about multiple earnings, multiple compression and earnings compression. And it's been very interesting watching this being parroted about. And that's what I kind of worry about. So first of all, Michael Burry right now believes we are going through a multiple compression, or we've at least maybe even been through the multiple compression. If we haven't gone very far, which is one of my first point against this. Is I think that some people have felt these stocks go down quite hard, like Peloton, maybe Tesla for a start, but even that hasn't gone down that far. The bigger companies still haven't gone down that far as multiple compression goes either. I mean, we've come down to the 20s. If you're expecting real multiple compression, we should be more like down at the 13 PE. Like the S&P 500 should be down to the 13s. The stocks like Google should be more like 13 forward PE rather than 20 PE that is probably right now, although I'm saying that from information that I probably have only gained 2 weeks ago. I wouldn't know what the exact multiples are right now, today. I could be absolutely eating my words in a second as Steve D types and finds out exactly what the multiples are. But if the multiple compression is already over, like Michael Burry's saying, we're now going into the earnings compression. The actual tough bit of this market downturn, this bear market, has actually already happened. This would be more like it's now done 75% of the drop, and the earnings drop that we're all expecting now. Like, let's remember this as well. The market is forward looking, so all the information that we have now is being priced in. So if everybody is talking to me about future earnings dropping, and everybody still, for some reason, is buying stocks based on earnings which are likely to be 15 to 20% lower than we expected, then surely the market is already pricing that in. And that's what I'm trying to sort of say to people is that this isn't hard. If this theory is true, then this isn't halfway. This is probably 75% of the way, and we've only got maybe a 20% drop left, rather than another 50% drop on some of the bigger stocks. And what's most important for me is I haven't felt this yet. I personally have not felt, mainly because my entire total return is still in the positive. I don't feel like I'm going through a recession that everybody else is talking about, and that's not. I realise I'm very lucky in that sense, and I realise also that I think there's nowhere to hide, and soon I'm going to be in exactly the same position as everybody else. But my portfolio has done exactly what it's supposed to have done so far, and tried to soften that landing a little bit. I'm not there yet, and if that does happen, then if there is more to come, then surely I should be feeling it. Surely the value investors should be feeling it a little bit harder, and the dividend investors should be as well. So I'm going to go out on a limb here. I'm not going to say it with certainty, because I think that's bad advice, because I share the same thing, share the same ideas that you do, Steve, in that macro I completely ignore. I try to completely ignore, because it's not about macro. Some people do very, very well, and I listen to them when they talk about it, but I don't think I act on macro at all. Somebody actually messaged me on WhatsApp the other day and said, this company could do pretty well because of the inflation and the interest rate rises. And I went, I don't care, mate. I really don't care. Buy good businesses that transcend recessions and blah, blah, blah. You should be perfectly fine in the long run. I think that's the investment thesis that we share here. But I'm going to say, and I'm not, this isn't my plan, as in I'm not investing in this way, but I don't think in the short term that this is going to go much lower. I feel like that big recession and that big drop is coming. It will come one day over the next couple of years, maybe next year. But I don't think for now this is going to go much lower. And there's a couple of reasons why I'll say that, and before I talk too much. Number one, that reason that I've said to you, I've said that I think the earnings compression shouldn't be as harsh as the initial multiple compression, because that's how it goes. But also, Burry's track record. So Burry was very good on two occasions. In 1997, I believe, and 2005. And obviously, these market crashes that happened afterwards were both 3 years later. So the market crash in 2000 was 3 years later than 1997, and in 2008, 2009, the great financial crisis happened. These are all 3 years later. So Michael Burry is very, very good at investing and pointing out macro, but he gets there extremely early. So I think we've possibly got 2 to 3 years based on historical evidence. This is all that I'm talking about. It's just a pie in the sky idea. We might still have 2 to 3 years yet before Michael Burry comes true, and maybe I'll get out at that point. That's the way I've been thinking. What do you think at the moment, Steve, to stop me from talking too much?
Well, I mean, that's why he calls himself Cassandra, isn't it? Because he's based on the Greek mythology. He was a Trojan priestess who was basically condemned to offer true prophecies in which no one would believe them. So that's why he calls himself Cassandra. I don't know what to make of Burry. I find him absolutely fascinating. Every time his 13F comes out, I look at it and I think, I have no idea how all of that screws together.
Long. He's still long.
Yeah, he's still long, but he's long on some cheap stuff. He's long on value. Essentially, he is a value investor at heart, I guess. But I agree with you to a point. I mean, unless we see some absolutely humongous recession where inflation is still rampant and interest rates keep going up and up and up. I noticed from the Druckenmiller interview, he said that historically inflation has never come down without interest rates being higher than the level of inflation. I mean, that's an interesting point. I would suggest that this might be it feels to me like the first time this is going to come down, because it feels like everything. This sounds like this time it's different, but this does feel like there has been quite a unique set of circumstances that has caused the inflation. And I wonder if, yes, we should see elevated inflation, but whether what we're actually seeing now is elevated, super elevated inflation. I wonder if we'll go back to maybe 4%, and then we may have to raise rates to 4.5% to just get it down back to 2%.